Hi there, a very good morning, good afternoon to all of you, depending on wherever you're hearing me. This is Simply Stocks, and I'm here with another video. And this time, this video relates to a Diwali special. So, a happy Diwali to all of you, and I'm outside from my hometown. So, they kindly take that on note because there will be a lot of background noise that you would be hearing. But I wanted to put up this video after a while. This has been more than a month that I have not put up a video. I have been traveling with my family and spending more time with them, and that's why I was not putting up any videos. But I have come up with this. Some of the best of the companies that I believe could do extremely well over the next 3 years. So this is a set of 7 8 companies that we will talk about. So I'll go one by one with them. This is not going to be a very long video, so I'll go as a small snapshot of 1.5 minutes on each of these companies. And probably what you can do and is divide your funds in these companies, and I'll describe as to how to you can say allocate on them as well. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should there with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSC and BSC, and that I'm not a portfolio advisor. Whatever discussions I have with respect to markets or investments is purely on the basis of my experience into the market, and whatever decisions you take on on my call on any of the stocks, kindly do consult your financial advisor before doing that. Another thing I want to point out here is that you can become a member on YouTube or WhatsApp or on Patreon, and for that you need to just probably click the link if you're on YouTube, or go to the link of Patreon. The link will be in the description. You get everything on these times discussion on domestic and global markets, especially Indian markets, how it is doing. Update on my updated watch list every 2 3 weeks. I put that up. Long term pick from my end whenever I feel like some of the companies are at a reasonable level to get into, and so access to my portfolio, whatever stocks that I am holding on to. So do check the link in the description. Now let me just take you to the screen of website. So these are the companies I'm going to talk about. So you might be seeing it straight away. Paytm, Dixon Technologies, Eternal, that is Zomato. This is Nykaa, FSN e-commerce, Ethos, Chalet Engineering and Plastics, Sequence Scientific, and Timex Group. It's an interesting one that Timex Group has spurred up so much over the last 1 year, over the last 6 months or so. We'll discuss one by one. So let me just begin with how the allocation should be. So if you look here, Paytm, Dixon, Eternal, and Nykaa are larger companies, more than 50,000 crore market cap companies. So you can put in 75% of your investment into these four companies, around 18 to 19% in each of them. And in Ethos, Chalet Engineering, Sequence Scientific, and Timex, if you're looking to put in money here and make it a portfolio of 8 stocks, then probably in these four companies that I've talked about, which are small cap companies, probably micro cap companies, put in a total of 25% in them. So between around 6.25% in each of these four stocks. That would augur well for you, because if these companies go under, any of these companies go under, and anything can happen in the market, at least you will not be wiped out. Because I believe that larger companies like Paytm, Dixon, etc., and even Zomato, which is a over a 3 lakh crore market cap company, should continuously perform well. Albeit they might not perform that well, but eventually they will make you returns over 3 years. I'm confident on the fact that the performance of these companies should be much better than compared to, and you will be sleeping well even more because of investing into these larger companies compared to the smaller ones. So let's go one by one into them, and very happy Diwali to all of you again from my end. So first is Paytm. I'll just go through how the numbers have shaped up so far. So on each of these companies. So in Paytm, what has happened in the June quarter, they did around 1900 crores of sales versus 1500 crores. And you see the profits have come back. So losses have curtailed. Eventually, we have seen operating profit of 72 crores on Paytm and margin of around 4% eventually coming in. There has been another income component even, and we are seeing on the bottom line 122 crores of net profit finally kicking in after so many after many quarters of losses. 122 crores of profit have come in, so 1.9 rupees of EPS. If this momentum continues, they could end up having around 8 rupees of EPS. Based on that, the stock is trading at 150 160 times, which looks expensive, but this is the nature of this business, that it could just blast off once it gets into profitability. So we'll see how things get on, but at around 11 times current sales, it is looking very decent. So Paytm is my first pick. Second is Dixon Technology, a stock that I own in my portfolio. Now, in this, the market cap is around 97,000 crore. It's trading at only two times sales. The sales have been pretty strong. The stock has fallen because it has missed out on its revenue guidance. The revenue guidance, not quite the revenue guidance, but on mobile revenue growth front, the mobile revenue growth expected was around 15%. They came out with 13%, and that led to the sell off. So currently what is happening is that the sales have been 14,850 crores in September quarter versus 11,530 crores. From 420 crores in operating profit, it has gone up to 560, 565 crores, which is a decent jump. And eventually net profit, which is adjusted, so you cannot see the numbers quite the same, because there has been another income component. So net profit has gone up from 236 crores last year in the September quarter to around 323 crores. So that has been a jump of 32%. So I believe going forward, the management is confident of doing extremely well in FY27. They are saying that they would do 79,000 crores of sales in FY27, doubling what they did in FY25. So that would be interesting to see. And then going forward, over 100,000, over 1 lakh crore of sales in FY28. So over the next 3 years, it could do extremely well, trading at very interesting valuations. If they do 1 lakh crores of sales, it's trading at less than one time sales 2 year forward, which is very interesting. Third in this list is Zomato, and Zomato has been doing well. We all know about it, but this is just the beginning. I believe over the next 3 4 years, the company should do well. The sales number minus again the extraordinaries and everything is a growth of around 55%, 55 to 60%. I think around 60%, 60% growth from last year's 4,800 crores. They have come out with the sales figure of around 7,600 crores, 7,700 crores this time around. And I think the momentum should continue the way this thing is catching up. I mean, home delivery percentage all over India is around 12 13%. So the penetration is only 12 to 14% at the moment. It's going to go substantially higher and quickly over the next 3 years. So I think this is also Zomato is also going to do extremely well over the next 3 years. And this year they're going to do adjusted sales of around 33,000 crores. Next year probably 50,000 crores in FY27, and that could even grow to around 75,000 crores in FY28. Based on around 75,000 crores in FY28 in terms of numbers of in terms of sales, the stock should trade at around 11 times sales or so. So 825,000 crores is very much possible. That's my estimate. Again, disclaimers do apply, but the stock could go up nearly 3x from here, around two and a half 3x from these levels. Next in line is Nika. Now, Nika is trading at 8.8 times price to sales after going up so much. What I like about the stock is that if you look at a full-time chart on it from 2021, it has fallen a lot, and then this was the pivotal level 227. It has taken out 227 and now is trading around 257. So this is a clear breakout, and probably the stock is headed back towards 400 pretty quickly. And from there on in, the sky is the limit, because then it's open skies for the company. What it has done in the last quarter, last two quarters, is that the sales and profitability is growing. The margins are expanding from those 5-6% to 7%. Eventually, net profit is again picking up at 24 crores now versus last year's 14 crores. So that is also growing. And so I think this growth should pick up with Nykaa focusing more on profitability rather than expanding big time. This should augur well for investors, and similar to Paytm, this should do well. I think it is perhaps in these three the most you can say valued stock in terms of value. This has more value at 8.8 times sales, etc. So I think we should look for more momentum. So these are the larger cap stocks that I wanted to talk to you about. The small cap ones, Ethos, I've always liked the company. Now what it did in the June quarter is that it did 45 crores of operating profit. Sales were around 346 crores versus 273 crores. So again, growth was there, and eventually bottom line 23 crores was net profit, has dipped. But I think going forward, Ethos should end up doing extremely well. I think Ethos should do well. The valuations are reasonable for the company going forward. Uh, the next, you can say, smaller company is Shell Engineering. Now, basically, the company engaged in the manufacturing and sale of injection molded precision plastic components. So these are the sub assemblers that they make. What I like about this is again the growth in the sales front. On the sales front, in March quarter, they did 218 crores versus 171. So that's again was a growth of around 30-35%. Then they did 247 crores in June versus 179. So again 30% sales growth that has come in. And look at the profit growth from 35 crores, they did 54 crores in March. And again, this time around they have done 68 crores. So sequentially there is growth in the profitability. 35 has become 40, then 46, 54, 68. So this should continue, and hence the valuations may look stretched, but the momentum is taking place, and 11,000 crore market cap company should end up doing well over the next 3 years. I think if this momentum continues, the stock could easily double from here. That's my assessment over the next 2.5, 3 years time. Sequent Scientific is next. Now, Sequent is a 5,000 crore company, market cap company in the animal pharmacy business, and it did not do well because Turkey was not doing well. Over this period, the business in Turkey really went under 3 years back, but now it is coming back into focus because the numbers have been pretty decent. If you look at it in the December quarter, what Sequent did was 391 crores, and the sales were dipping. If you see here, 361, 390, 369. Year on year, the sales were not doing that well, but eventually they now things are picking up. 402 crores in March versus 360 crores, 441 crores in June versus 390 crores, and margins are expanding. So from 11% it dipped all the way. If you look at it, the margins dipped year on year. So what happened was 8% became 1% in 23, now 4%, and now it is picking up. So over the last 2 quarters, the margins have been around 12%, and I think this year they could have a margin of 12% versus 11% last year, 10% a year before, 4% even before. So I believe that Sequence Scientific is now on the cusp of a major run again. The stock could show a major run if you look at a 5-year chart of Sequent on the price front. If you look at a 5-year chart, then you'll have an understanding that the high was around 280, 300 rupees in 2021, and it has fallen way down to around 80, 90, 60 rupees even in March 23, and has now picked up steam. So I believe that Sequent could hit new highs and go further higher. So this is something to really keep an eye on, Sequent Scientific. And finally in the list is the Timex Group, 3,800 crore company. But now numbers are coming in. For a while numbers were not there, but if you look at it in the March quarter and June quarter, and from December quarter onwards, sales numbers are picking up sequentially quarter on quarter. 120, 135, 169 crores. Look at profits from 4 crores have gone to 14 and now 22. Margins from 4% has gone to 11 and now 13%. So this is a really good sign from a small cap company that now things are picking up, and hopefully going forward we'll see Timex continue with this momentum. If the momentum on the numbers front continue, next numbers are on 4th of November. So if numbers continue to be good, I think there's a long way to go for the Timex group in the same business as Ethos to do extremely well going forward. So these were my picks again: Paytm, Dixon, Eternal, which is Zomato, Nika, Ethos, Shell Engineering, Sequent, and Timex Group. 8 companies for you this Diwali, since I have not put up a video for a month and a half. Kindly go through it. I apologize for the background noises, etc., because I am at some other place and it is very difficult to probably cancel out everything. So at the moment, I believe that these companies, with right allocations, if you can invest into, you should be doing well over the next 3 years. These are 3-year investments that you can look at. Again, disclaimers do apply.